this year, the hype, the buzz is creative financing. So Alex, I'm going to throw it to you. What the heck is creative financing and why is it the buzzword in real estate this year?
So creative financing is really interesting because you can buy houses without a bank and you can also become the bank. So I'll get into that later, but there's a couple different ways that you can buy houses with creative finance. So our favorite is subject to, where we take over the existing mortgage subject to the existing loan, right? So now we become the new owners of the house. And now we're responsible for that house and we get a house at a really low interest rate. And then there's also seller financing, where seller financing is where the seller or the landlord becomes the bank and then we make monthly payments to them.
Gotcha. And this, I want to pull this up because you guys, was the deal on Oahu in Mililani, was that a subject to deal or seller finance deal? Was that your deal?
Yeah, it was a subject to deal.
So break it down. I even screenshotted you guys' Instagram post today. Let me see if I can find, here, I'm going to read it actually. So seller financing deal. So you're buying a house on Oahu on the west side for $583,000. $0 out of pocket is what you posted here. Interest rate is 7.25, which I think you can get today, depending on your FICO score. 30-year term and a monthly payment of $46.77 for a 2-bed, 2-bath with 2 parking spaces on Oahu. But you don't need a bank. So tell me about this deal.
Yeah, so we actually just called. Nick actually helped us out in getting in contact with the agent, but let's say they were asking about $450 around there, and then they owed around like $400. So after all the closing costs, after paying all the agents, they were going to pay out of pocket. So we came in there, pitched subject to, and that real estate agent actually despised subject to.
Okay.
And actually, we collabed with Nick, and Nick was able to just pierce and break that agent down and was able to close the deal.
So break this down, and I want to really dumb it down and try and make it as simple as possible, and then after that, as tactical as possible.
Yeah.
So first off, from a buyer perspective, why is buying a house subject to so awesome? And Alex, I'll throw that one to you.
So a reason why a seller would want to do subject to, right, is because let's just say they've been trying to sell their house for 30, 60, 90 days or even longer, and they bought the house only a couple years ago, so they have very low equity. So when they have very low equity, typically they have to come out of pocket at closing. And a lot of these sellers, they can't come out of pocket. They don't have 20, 30, 40K. So that's where subject to is really vital, where we can just take over their mortgage and relieve them from that problem.
So if you're trying to buy a house without using a bank, subject to, I think, is the Googleable term that you should do. Now, Virgil, I'm going to throw it to you. If I'm the seller, why would I sell a house subject to?
There's like several reasons why. You might be moving out of that location, or you're behind in payments. Let's say you're in the military and you get PCS and relocated out, and there really isn't that much time, and you already got into specifically a VA loan. You go into there 0% down already. So you don't want to pay 2 mortgages. And that's another thing as well. You already bought a house in that new state or new place that you got, and we're there. It's subject to helps relieve that debt from you.
Okay. And how many deals you guys have? I feel like every single time, at least I've seen Alex at a meetup, the amount of deals you guys have done on a monthly basis has just continued to go up. So how many deals are you guys at now?
Average, we're doing about 7 to 10 a month as a team.
Gotcha. And how do you guys make money on that?
So there's a couple different ways we make money, right? So when we buy a house subject to, we can either have it as a long-term rental or a midterm rental. I actually have my brother, he manages some of those. If we ever have any vacant houses, he can sometimes get an insurance claim in there and get us 3 or 4 times the amount of long-term rental. And we also do wraps as well. We can get into that, but there's a couple different ways we make money with it.
So give me an example of a spread that you guys made on a deal.
So we'll talk about a wrap, for example. One wrap that we did, we bought that house at 3% interest, and then we charged the next person 6.75% interest, right? So our monthly spread is about $1,200 a month. And we got an upfront down payment, and then we collect monthly cash flow as well.
So you guys are making a little over $1,000 a month from basically being, would you say like the second bank or the bank? What is the easy way to classify that as?
The easiest way to call it would be, so we bought the house and then we still have to pay the underlying mortgage, but we do a wraparound mortgage to someone else that can't qualify the traditional way. We're helping someone get into a house that doesn't qualify the regular way, and then we're making a little bit of money on the side as well.
So if I'm understanding it correctly, there's an existing mortgage in place and we're not relinquishing that. We're not paying that off. We're keeping that still in play. And then now you're taking another mortgage, another note on top of that wraps around it.
Exactly.
Yeah.
You got it.
And
You got
from
it.
there, you're charging a little bit more money. So that way the original lender still makes its money. You now, as the new lender, would make some money on top of that. How is that legal? I'm sure is the question that you get.
It's 100% legal. It's actually been around for a very long time. And it's, yeah, if you do it properly and correctly, it's 100% legal. We do use a servicing company to make sure everything gets paid. So how it works is, so we have to pay the underlying mortgage, the subject to loan, and then we use a servicing company to pay the other loan for us. So we never actually touch the money, right? Everything goes through a servicing company.
Yeah.
And-
And when it closes a regular escrow company, it's called it's not called in like a wraparound mortgage. It's called an all-inclusive trust deed. And that's been going on since forever.
Hey, if you enjoyed that clip, make sure to click the link down below to get to the full episode. I'll see you there.